All right, let's dive into the technical story of BigBear.ai, ticker symbol BBAI. We're going to break down what the charts were telling us as of mid-January and see if we can figure out where this stock might be headed next.
Right off the bat, the data paints a really fascinating picture. This stock has all the signs of being wound up super tight, just packed with potential energy. But the big question is that energy about to launch it upwards like a coiled spring, or is this a ticking time bomb just waiting to drop? Let's dig in and find out.
So before we can even think about where a stock might go, we have to get a really clear picture of where it is right now. So let's just set the scene and establish our baseline with the most important data points. And here it is, our starting point, our ground zero, a closing price of $6.17. Pretty much every indicator, every level of support and resistance we're about to look at, it all revolves around this one number. Now, what's really telling is where that 617 price sits. I mean, look at this. It is almost perfectly smack dab in the middle of its 52-week high and its 52-week low. This is not a stock screaming at an all-time peak or wallowing at rock bottom. No, it's in this state of pure equilibrium, which is a huge sign of market indecision. So, the first major clues about this indecision, they pop up when we look at the moving averages. Now, you can think of these as these constantly shifting lines of support and resistance, and right now, BBAI is caught in a serious technical tug-of-war between them. And this slide just illustrates that conflict perfectly. The price is literally sandwiched. I mean, on one side, it's fighting to get above its immediate short-term resistance. That's a bearish sign. But on the other side, it's holding strong above its supercritical long-term 200-day average, which is a very bullish sign. This is the absolute definition of a market that's just holding its breath. Okay, since the price itself is just stuck in the middle, we have to dig a little deeper, right? Let's look at the forces working underneath the surface. Things like the strength of the trend, the momentum, and all that stored up energy, also known as volatility. First up is the ADX. Now, here's the cool thing about this indicator. It could not care less if a stock is going up or down. All it tells us is how strongly it's moving in whatever direction it's going. So a low number means the market is quiet, it's consolidating, it's basically just waiting around. And what's BBAI's ADX score? A very, very low 12.77. This tells us the market for this stock is, for all intents and purposes, taking a nap. There is just no strong conviction from either the bulls or the bears. It completely confirms that we're in a consolidation phase. Okay, next, let's check the momentum using the RSI. This thing measures the balance of power. Are the buyers or the sellers pushing harder? A score of 50 means it is a perfectly balanced fight. And BBI's RSI? Look at that, 51.17. I mean, you really can't get much closer to neutral than that. This just screams a profound lack of momentum in either direction. That tug-of-war is still going on. But it gets even more complicated, because even within the momentum indicators themselves, there's disagreement. On one hand, the MACD, which is a super popular momentum indicator, just gave a weak little bullish signal. But at the same time, the Chaikin oscillator, which tracks money flow, is negative. That suggests sellers are quietly getting rid of their shares. We're seeing conflicting signals everywhere we look. And all of this brings us to what might be the single most important clue of all. The Bollinger Bands, which measure volatility, are squeezing, getting really tight. You have to think of this like compressing a spring. The longer and the tighter that squeeze gets, the more explosive the move is likely to be when that energy is finally let go. The million-dollar question is, which direction? Okay, we've seen all these conflicting clues. The price sandwich, the sleeping trend, the perfectly balanced momentum, and that coiled spring of volatility. I think it's time we weigh all the evidence and try to come to a technical verdict. So first, let's make the case for the bulls. What do they have going for them? Well, the price is holding that critical long-term support. That's huge. The parabolic SAR indicator is still flashing a buy signal. We've got that weak but still positive MACD crossover. And the Stochastic RSI, another momentum tool, suggests the stock is getting a little oversold short-term, which could mean a bounce is coming. Okay, now for the bears. What's their side of the story? Well, that low ADX score confirms there's no real trend to jump on. The Chaikin oscillator shows money is flowing out, not in. A recent price drop happened on high volume, which is almost always a warning sign. And to top it off, the price closed below its daily pivot point, giving sellers a slight edge going into the next day. So, what's the final call after putting all of this together? The source analysis boils it down to this one assessment. It's a neutral to slightly bullish consolidation within a longer term uptrend. The keywords there are consolidation, meaning it's just going sideways, but within a longer term uptrend, which tells us the overall positive bias is still there, at least for now.
Analysis is one thing, but how do you actually trade it? This next part is all about translating that data into a practical playbook. We're going to identify the key battle lines on the chart and figure out what strategy this analysis is pointing towards. Here are the lines in the sand. You've got resistance, the ceiling, right up around 660. Then you have support, the immediate floor, right around $6. But that major support level, the 200-day moving average down at 557, that is the one that the bulls absolutely have to hold. These are the battle lines. So the strategy here really comes down to one word: patience. Step 1, just acknowledge that the squeeze is happening and a big move is probably coming. Step 2, watch those key levels we just identified like a hawk. And step 3, the most important part, wait for a decisive breakout. Don't try to guess. Let the market prove to you which way that spring is going to uncoil. And that's where we're left. Every single indicator we've looked at points to a stock in the state of perfect tense balance. It's a textbook consolidation, and we know it can't stay this way forever. So the ultimate question for anyone watching BBAI is simple. When this balance finally tips, which way will it break?